what's going on. Anyways, but yeah, so I do have to get that hard stop like 5 minutes after. So hopefully, if I can cover everything, and if not, feel free to reach out if you got questions. Happy to answer. So let's begin, shall we? Well, first of all, I kind of feel good about. Hold on, let me pull this up. There we go. I kind of feel good about like what we're seeing in the market over the last couple of days. It's actually, I know it's been going higher, and there's a lot of shorts and stuff, but I'm actually kind of thinking that it's behaving, I guess, to expectations, I guess you could say. The one thing I wanted to show you guys here, let me just do this real quick. You can kind of pick out this 5-wave cycle here. And right away today, when I posted that chart in Nasdaq, where if you zoom in here, it had like that A equals C kind of vibe to it here. I'm not sure when I posted it. I want to say maybe like 15 minutes before the close or something, but you can kind of see right here, like it bounced and there was a lot of volume here, and they're not going to sell it down like crazy once. Everybody kind of expected the Fed decision to be relatively flat, with their things. There was no crazy, announcements with the, with what Powell said during his meeting. And with that being said, I mean, it just kind of looked like there was a lot of volume at the 1 minute level, and that's, you can kind of see this like bell curve here. And usually when you're thinking about buying a dip, you really want to look for these. These little volume wicks down here, and as it kept kind of creeping up here. Plus, it kind of looked like it was making like a wave 3 anyways. So long story short, here they don't typically slam the market down before before they had major earnings. And I kind of thought that we were seeing some good buying because they're testing the floor here, or at least like what support should be. But then also I think that these guys are all playing the earnings game too. And I can also kind of see here that this does look like a final, like a wave 5 of 5. So this is like a wave 4 in general right now, kind of making a triangle. I mean, you don't typically see these sort of triangle moves like in a wave 2. This is actually very rare, but I kind of feel like sometimes there's a fake out there, but there's still just a ton of volume here trying to catch the knife and then ultimately drive it higher. So for earnings, to kind of put that into perspective here, let me pull up Microsoft. So Microsoft, let me do the hour. So Microsoft today finally hit its, sorry, it's a little tough to click around and talk at the same time. So it hit its this 1.382 extension. And as you guys know, been kind of calling that out recently. Like if you look at, let me pull up like Bitcoin, and so like Bitcoin here, it's got this 1.382 extension, and it's really just from the bottom of whenever we had like the lowest lows in April. And usually like Nasdaq leads, right? But then if there's a reversal or something, sometimes the Dow leads. But when you have these big old bubbles, kind of thing here, you usually get these like you usually get the topping signals from the Nasdaq. But I guess you could say, sorry, switch back. So, I mean, no matter what the wave count actually is here, I mean, you can still pick out a 5 wave. It's just, this is ridiculous. This is grinding higher with a very, very tight channel. And I mean, you guys have been there every day for it. So you kind of know, what the deal is. But I kind of think that we might just grind a little bit higher here. There's a lot of resistance at these levels because people typically, I mean, like you can kind of see that the volume here, right? Like there's still, even though Microsoft still, shot a little higher here, you still get these major levels of resistance. Like once they're pierced, then, oh, I'm sorry, I'm not showing the 1.618. God, I gotta get with the program here, guys. Sorry, this is what I mean. So there is that typical resistance at those levels, but once you get to these 1.618 levels with these big spikes, like typically that's like a trigger to get it sold down. So being this nice round, or 550, 555, whatever. It's kind of, it's one of those things where you just look at it, you're like, okay, well, it's a fair number to stop at, something like that. Like if you look at something like Meta, it's got this, it just has like 800 written all over it. Like it just wants to get to 800. And I mean, you can still qualify this as like an ending diagonal, wait for, what have you, but I still think we're gonna, kind of roll up to here. So with that being said, we have, when is Apple? Apple is tomorrow. So I guess just mega caps in general, everything's priced to perfection. And once you finally hit those final levels, then it's like, all right, now it's time to sell. A lot of this stuff is based on greed, and how high can we drive the prices until you get to the point where you start to introduce more risks to the markets, like systemically, where you have this issue where, okay, well, we've gone so high so far, and we're going to keep driving it higher. Well, then all of a sudden, now they want to take profits, and then that creates that like cascade effect. So today with the Fed, I felt like it was more just like a wave for like, let's hit the target first, and then bounce off that target. And that's exactly what happened. It's a little tough to put that in words, I guess you could say. But, with major earnings season, I do think this is like the climax of this rally. Before, when you're hitting other, extension levels, like I was talking before about like Bitcoin, right? Where it's got this, 1.382. This is typical for like a regular B wave top. But if it does extend, which actually kind of looks like it's going to, then it's not really an irregular anymore. It becomes like a wave 5. And the issue with having a massive wave 5 is that you get a very large ABC after that. So that's really, I guess, the main takeaway from the webinar today is that we have these extension levels that are being hit, that like these longer term extension levels, and you're also looking at stuff like look at the volume. Okay, the volume has been just declining, and you get this big old divergence here. But this price action here is also not very regular. This just seems to me like there's market makers trapping, burning theta, and I do think that a lot of that materializes in the VIX, where you've seen the VIX just have this complete inverse relationship to what's going on. And I mean, as designed, right? It's volatility. Plus also the RSIs are super elevated. Like we have many different bearish signals, but we don't have any bearish action. And you're kind of looking around like, okay, when's it going to break? And it will break. It's just a matter of, can you survive long enough, with the available capital in order for you to play the short side? And there's a lot of truth to some of the old sayings of if you can stay solvent for long enough, you might be able to short and make a big pot of money. But so I guess what I'm looking for here is I'm looking to see after earnings this week. So we've got essentially rates held flat. We have the GDP forecast in, but that stuff kind of gets revised. I mean, I personally didn't spend a single dollar on myself in Q2, so I don't really know where they're getting the numbers from. I'm kidding. I don't move the market like that, but I mean, you get a lot of these conflicting data views, okay, GDP's up, but housing sales are way down. I mean, I can't sell my house. I got a beautiful house, and we have had one couple walk through in 2 weeks, and it's priced right. It's priced, at market. I'm not trying to be greedy with it, but not trying to give it away. There's just not a lot of buyers for big ticket stuff. Maybe they're waiting on interest rate cuts, and that's probably the most likely case. But even if that doesn't happen, you still get this excess bubble that needs to be corrected. You're having something like a small little pullback like this is not realistic. Even if you draw like a upper trend line here to kind of like you might have something like this where you get a little bit more height to like maybe 24,000. But I do think that we'll get some sort of selling or somebody to step in here right around this like 23,635 level. And with the S&P, it's kind of like the same thing. It's the same target level, and it's at the 6,464. If you look at something like the Dow is kind of rejecting at this 45,000 level. So I'm kind of thinking that might be it. Plus, it's also a triple top. If you look at something like small caps, I think small caps are probably going to survive this little move down here. and they might catch up and hit bull target 2 at this 23.13, because that's also like a major point of resistance here, for like other times where it got sold down. So I guess the long story short here is that we're, a lot of these indexes are looking like they're topping. Well, I mean, they have been for a while, of course, but you're starting to see this, this more pronounced divergence of volume in all these different charts. So like your Nasdaq, your S&P, and then when you zoom in, it just kind of looks like the same. And over the last couple of days, I've also seen some very, bearish price action with just, like how the buys and sells are coming in. I wanted to show you guys just real quick here.
I have a question while you're flipping charts.
Yeah.
I have a question.
Yes, sir.
So your charts aren't secret. I mean, everybody who knows how to do charts sees the same thing. I assume it may could draw them slightly. I guess everybody could draw them slightly different. So is it just a matter of the first big money person just decides I'm done and they hit the sell button and then everybody else, well, I see the flows coming in, I better start selling too.
Yeah, sometimes. So what you'll see, and some of the things I've been flagging in the channel were like the dark pool trades. So I mean, you've had $20 billion worth of. I mean, they don't really look like buys because it's still looking like a top. Sorry, let me go back here. So kind of looking like a top, but if you get these, usually what you see is the distribution of this. So a lot of those sales were 1.3 billion. Or like, split up between 600 million and whatever, but it usually kind of totals to 1.3 billion. So it's like they're distributing, but not all at once. And once all those shares have been distributed, as you're climbing up here, then they do the market sells once you hit those key levels. And typically, I think I said it in the post yesterday where it's like, markets move fast intraday, but like longer term, they move like a glacier. It's like, I mean, we've had months of this and it's been a relatively tight range, but then you can still see longer term, you can see the divergence of volume. And every time we have that divergence of volume is grounds. That's like my number one indicator for things are going to reverse here at like the daily level. Now, if you look at the weekly level, like we do have exhaustion counts. We had one a while ago, but to kind of, tie it back and answer your question, yes, I do believe that it's usually one big player. Let's say, like Chase, for example, like they have a lot of, short positioning, or, like Jamie Dimon's had some pretty bearish comments. They might be talking with their trade teams like, okay, we'll defend this, or like sell at this level, defend it, because once this level gets hit, then we're going to market sell everything down. Because you also have issues with inventory. Like I think Mal had asked this question a couple weeks ago where, if you look down here at this volume profile, you have almost no accumulation down here, and you have almost all sells. So you have a lot of shorts that were trapped here that had to cover, but that only gets you so far. It gets you to about, maybe double the range so they can make their money back. And then you had that gap up, but there still hasn't been a ton of accumulation. So the fact that this just keeps grinding up tells me that it's a hated rally because people aren't, a lot of people aren't in it and they're not participating. At least that's my thought on it. But also too, now that we kind of know it's like a 5-wave impulsive structure, then we can measure that. And you're right, like everybody has the same chart, same data, same access, and usually what they're looking for are the same things. Elevated RSI, which is check. Declining volume over time, check. You have all these different things that that we all kind of look at, but you're really looking for like the devil in the details, which is, okay, there has been a $20 billion net, dark pool trades in SPY over the last 2 weeks or 20 days, really. And then you had, a big one yesterday. We all expected, the Fed keep rates flat. There's also political considerations with, like what's going to happen with tariffs. So on and so forth. So I guess hopefully that answers your question with that. It's just, everybody kind of looks at this and they all kind of come to their different conclusions, whether, it's going to go to the moon, it's going to go higher and higher. And I don't discount that it won't. It's just that there's so many different things pointing to, like a bearish scenario that it's like an endurance game at this point where, do you have enough, do you have a strong enough stomach and enough patience to sit through, some more drawdown? for the larger reward, because I still think it's a poor risk reward proposition here for just for the just for equities in general. So that answer your question in a long-winded way, of course.
Yeah. Thank you.
So I mean, I would say a couple weeks ago, I think I was more frustrated than I am today, because now I can kind of see it a little bit more clear where these are key levels that we're heading towards here, and the volume is declining. So the divergence is there. All the warning signs and all the telltale, reversal indicators have been, firing red for a couple of weeks. It's just the endurance part where, okay, now they're waiting for earnings. They're not going to sell the market down 20% before you hear what, Meta and Microsoft has to say. Or, Amazon, all the big companies that are really driving all this market cap. Excuse me. So, in the best interest of time, let's cover some of the other charts quick. So the yield has been a little weird. I think, I think if we get, we have PCE data tomorrow, and if the yield, it kind of looks like a lazy wave two. I don't know how else to explain it. Like when you see these impulsive moves, it kind of behaves with the law of alternation, where you have like a sharp wave two. Usually you have a sharp wave two, and then like a lazy wave four. By lazy, I mean it's just like, you draw a box around and it just takes a month to consolidate, kind of like oil had been. But I kind of feel like sometimes, they flip the script, and it's not uncommon. It's just, you got to look for it. So we're seeing like a bull flag that's developing here. And what I really wanted to do was kind of sit it out today and just wait and see what was going to happen with the rates after, Paul started talking. And I really do think that, rates are going to go up, because now we know for sure that, the rates aren't changing until, they talk in September. And there's really no other way, I guess, for bond traders to price in risk other than, they want more premium for their present value. So I guess the conclusion that I'm drawing here is that, like, I know Alex and team are bearish on rates, and longer term I'm bearish on rates, but bond traders are the best in the business. And when they're looking at this stuff, they're thinking about, I want to make more money because I know my coupon is going to be worth less in the future if we keep having all this inflation. So we had a little bit higher of an inflation print, a couple of weeks ago. Now we're going to get PCE tomorrow, and if I pull up, so we're going to get core PCE tomorrow. When is CPI? Is that next week? I can't remember. Well, anyways, I mean, we still get unemployment rate. Yeah, I mean, that's probably going to still beat forecast or whatever. It's going to be like 4.1 or something, or it's going to be something good. Non-farm payrolls are probably going to be a nothing. We had higher actuals. So I mean, you get these high level numbers that show things are fine, and then you have like the tale of two cities, where you have like consumer sentiment that's kind of lower and stuff like that. So we'll see what happens here, but I think that as long as the economy is still humming along here, yes, valuations have reached sky high levels for equities, but it's not really about equities anymore. Like equities have kind of like played their hand, I guess you could say. And the 10-year yield is really like that arbiter of what the bond traders expect for the economy. So higher yields mean that bond traders are thinking that short term, the next couple of years, we're going to have more inflation. And I do believe that is the case. It's just that it hasn't been confirmed yet with numbers. So if we see PCE and CPI data that comes in that's a little bit higher than forecast, that kind of stays by that 3% range, Powell's going to keep rates the same, or he's going to get fired somehow, some way, or they're going to belittle him on the internet to everybody. What I mean? So I guess what I wanted to say here is that this does look like a bullish sort of trade. And I don't think that rates are going to go down within like the next 6 months, just because there's lots of tariff inflation data that's needs to be processed. And as long as unemployment stays low and, inflation stays like below 3% or slightly by 3%, like the rates are going to just be flat. So that's kind of what I think about that. For gold, Gold has been, I was a little mad at gold today. So it's probably gonna retreat a little bit more. I kind of thought that we would have like a bounce, like a triangle here, with some consolidation, but we saw some heavy selling in gold today, and I'm not really sure what was the catalyst for that. I think all metals got whacked today. Like if you look at silver, I mean, silver took a big silver dumped pretty hard today, and I know that copper did too. So if you look at just metals in general, like metals are an inflation hedge. So why is it going down? Well, and the rates stayed flat. Maybe it's front running. Maybe it's big traders trying to push the price down so they can accumulate, and then they can drive it up for another wave higher. That's kind of what I think is going on right now. So gold, it might just be, we gotta sit through it a little bit. This sort of pattern here might extend down a little further, but that would still be a good entry for gold, because this is still a triangle until it's not. And triangles are usually wave fours, or triangles are usually just a means to an end. So if you look at this, this is a, if you look at this through just an objective sort of lens here, you'll probably get some sort of like pattern expansion. So you might get like on the high side here. So this bull target does hold, but if we do get some lower levels like down here, then it might just hit like or the final bull target might be around like 3,600 or something like that. So yeah, I think metals will bounce back. They just need to clear out. People are taking profits. They got to position for that. For oil, I'm happy that oil's starting to jump up a little bit now, because it got quite a large trade on that. We'll see what happens when it gets to the 50% mark. I kind of feel like, I don't know, I'm over allocated in oil. I want to thin down the position, but I also have I have like a 1 to 2 short hedge on that. So anyways, it's like 90 grand. That's all lumped into oil here, where we could repurpose that and make some other trades with like some single stocks like Tesla or Nvidia or whatever. You could do stuff like that. And also natural gas too does have a downward trend, but I'm still kind of thinking that it's finding a floor. And then you might get this. Natural gas, it's coming up on another another good period of seasonality, but that's in like September. So if you kind of look at the volume here, we got a good buy up, and then it kind of got sold back down again. The first couple of minutes in the morning here, but we still did get that pop up for that B wave. Or sorry, we should still see something like this, because this larger term or longer term pattern up here does look like an ABC down, but after that, you definitely see some sort of pop. So if it doesn't hit this B wave, there's only one unit allocated to it. If it hits, or if it hits this A equals C sort of level, this 2.64, then I'll definitely add some more, maybe like 2 units to boil. SOX, I think, is had a lot of volume exchange at these levels. I still think that this is a very key level for SOX. I can see a pretty clear like a 5-wave pattern here, and this looks like an extended wave 5. So if you map it out like this, you can kind of see you got this 4 and a 5, and the 5 kind of extends, where you can see it's got another impulsive wave here. So it's like a extended wave 5 of 5. Those kind of sounds weird to say it, but it's kind of what SOX looks like. And also too, if you look at the video, like, come on, it's high. Doesn't mean it can't go higher, but all right. So anyways, if you look at something like Bitcoin, I do think that we might see another run higher here. Maybe like this 131,000 kind of thing. But that would, in my opinion, that's probably like, it's not going to happen with equities. I think that, there's been enough sells at this 1.382 level that you might get a good, like a wave 4 sort of pullback and kind of revisit these lows from April. And it's a new favorite asset to be traded by big institutions. So they're going to want more inventory. They're going to want to whipsaw people. These consolidation zones probably won't last long. So those are kind of the thoughts on Bitcoin here, just short term. Nvidia, this has got one of those classic overthrows. The 180 mark is pretty significant. You still see declining volume here. overall. I mean, you certainly don't see the volume you saw, back here, back in like April of 24. With these big sells and big earnings events and things like that. And if you look at the earnings events, they're almost all sells. So we don't have another earnings event until a little bit later. But I don't think it's gonna stay up here for long. Same thing with like Microsoft and Meta and those guys. So now if you look at something like Tesla, this is what I know Yemen is very bullish on Tesla. I'm just not seeing it. It just doesn't look strong to me right now. It looks like there's a lot of like profit taking up here for at least in this current cycle. They had a really crappy earnings report, and they continue, like, if you look at the financials for Tesla, you got these here we go. Wait, what do I want to show you guys? Stats. And maybe it was revenue. Sorry, I don't want to dig through it, but I was looking at it yesterday, and there was while they did recover. Yes, Don, you got a question?
Not a question, but the bulls on Tesla, they're saying forget about the numbers. It's all about the robo-taxis and the robots.
Yeah.
And the future. So you're betting on the future.
Yeah, no, it's a good it's a compelling argument if fundamentals don't matter, and at this stage of the market, fundamentals don't really matter, but only in this stage of the bubble can you make a statement like that says, oh well, it's what's coming in the future. Well, yeah, I mean, it's what your curves and things are supposed to estimate, but I still think that there's a lot of headwinds there, adoption and whatever, but I don't doubt that they're not going to make the money from it. I just don't think it's going to be something that's going to materialize right away. So I think we might see some break lower here, but we'll still need to see confirmation if it sells through this like 263 level. I think that's a pretty strong level. So let's talk about MSTR, because I gotta run here in a minute. So if Bitcoin, let me pull up the Bitcoin chart to the side here. So let me clear this out. So if we do see this run here, where Bitcoin does one of these moves where it heads up higher, then you kind of see what I'm saying. Then I do think that you'll get some sort of bounce here with MSTR. I think that at minimum you could see like a revisit to this 430 level. So I think having like a hedge for MSTU is good. But then after that, what I'm looking for is a sell down, because you could make like a head and shoulders, but it still doesn't look very symmetrical. So I'm thinking that the longer term sort of view here with this ending diagonal is probably going to play out. But again, if equities start to fall, Bitcoin should fall, and then this doesn't matter anymore, because you can still pick out like 5 waves here, and you could make the argument that there's 5 waves and this last little tail here. But what I'm looking for is I mean, you're right, or Eric, I think you posted this today, like the market rewarded their crappy earnings, and I think it's just they have Bitcoin in the balance sheet, and as long as Bitcoin is tied to this, I don't know if it's going to really come down much, but as soon as equities release some air out of the tank here, I think that we're going to see the same with like MSTR. It's a zombie company. They just have a cool balance sheet. That's it. So, and there might be some fraud. We don't know. From one of the last articles I was reading here. All right. Well, I do need to run though, but I have time for like one question. If anybody has a question.
Well, I did do a little hedge on my SMST about halfway, just trying to figure out if I'll do a full hedge for my vacation or just leave it at half.
Sure. Okay. Well, you know what? Like it's not a bad thing, because like if your net bias is short, and if you add a 50% long hedge, then that's actually how I would play right now. I don't know like how much you have in it or like how much is invested, but If you do see this little B wave, you can always cash out your hedge, your 50% hedge. So like you're still not like you're not losing as much, but you're also making some on the side, and then you could probably add that back in whatever your profits are to improve your cost basis for SMST. And then hopefully, if you get this C leg down, you might get lucky and be able to exit, or might just continue to slide. So, but we're just not sure yet. So we have to wait and see what happens with earnings. But that's actually what I would have picked is to do like a 50% hedge here instead of 100%, because it could very easily, just to kind of illustrate here, you could see something like even like after hours. That's what I fear now, is that a lot of these trades would be made like after hours. So you could see like a quick pump during the night or something like that. And then in the morning you wake up and it just slides 10%, that kind of thing. But I do think that a lot of people here have taken some profits, and there should be a retrace. But, as soon as that does retrace, I think it's headed off the cliff after that. So. Well, I guess, I'll be around. So Eric, or anybody else who wants to ask questions about MSTR, I'll post about it tomorrow morning about what my plan is for it. I think I'll have to drum up some capital for it. So I'll have to probably take a loss on something to drum up some extra cash, but I still want to make sure that that's properly hedged. I know a lot of people have been talking about, like where to hedge, if I say like you should have hedged, but okay. All right, guys. Well, yeah, thanks for joining as always. Hopefully you guys did all right today. Again, I think we're going to do a little bit. I think we're going to do a little bit, more bullishness. But I think like with Apple, they haven't had anything spectacular in a long time. Plus, they're like a premium product company. They have a lot of challenges with people being able to afford $2,000 phones. So we'll see what happens. But all right, guys. Well, let me know if you have any questions. Happy to answer them.
All right.
And keep on staying strong, guys.
All right. Thanks a lot.
All right, thanks, guys. Talk to you later. Bye.